Good afternoon, everyone, and welcome back. This is Daily Trade Analysis with a quick market update for today, June 12th, Monday. We are starting the week without today any big important data. The only one that we got is consumer inflation expectations for May that came a little bit lower than the previous one, from 4.4 to 4.1. So expectations in terms of inflation from the consumer is actually improving. But that doesn't mean that inflation is going down. That will happen tomorrow when we see the inflation rate tomorrow, Tuesday, at 1 hour before the market open. Core inflation rate. Actually, if we see the consensus, if we check the forecast, we are expecting lower month-over-month inflation general, but core inflation rate remains there at 5.5 and slightly lower from expectations. I think for core inflation rate month over month, we are seeing flat. That means that the consensus is that the inflation is still sticky on the core part, on the services, on the shelter. And given the fact that the statistically calculation is actually trimming out, getting out from the big months of inflation last year from April, May, and June, we are going to get rid of those readings. It's obvious that if we get rid of those high numbers, high readings, inflation will go down, the final number. But that doesn't mean that inflation is actually going lower from the price in point of view, from the consumer point of view. It's one thing that statistically the calculation is moving year over year, so we are improving in that number, in that calculation, but this is just a trick. This is just a matter of the calculation, but in the real world, in the real households, in the prices, in the consumer, in the shopping cart, I'm not seeing any progress. So be careful with the optimism that this inflation reading is coming, because if we don't see other related readings from other part of the economic data, for example, from PPI, for example, from consumer spending, and all that stuff, the actual rate on inflation in terms of inflation, in terms of calculation, it's going to be basically cheating. If you check tomorrow, we will check in that, but if we got the same amount of inflation from last year in this month, we are going lower. So it's just a trick. In my opinion, people have no idea that inflation going lower, that doesn't imply that the real world economy is actually getting improving in terms of inflation, because the calculation is just there. It's as clear as day that if we get rid of higher readings, we are going lower. But that doesn't mean that these readings, these months, are actually good. So core inflation rate, it's key, because that actually reflects the core, the services, the shelter reading that Fed is watching in terms of month over month. And that is actually flat on the expectations. It doesn't matter year over year in terms of core or inflation, because this is just going to be lower unless there's a real catastrophe. So if we remain there, that doesn't mean that's good news. I want to see month over month core inflation going down. So until tomorrow, we will just be waiting for that. And the market actually did do exactly that. They were waiting for the opportunity to continue higher, basically. So in pre-market, we were just holding settlement, holding these pre-market lows and prior close, and we established two really nice pivots. The first one is just this pre-market high, and the other one was this Friday high, that is almost there at this last week high, that is the blue dot line that I always have in my charts. So having these two levels into the open, we just chopped out. And it was quite interesting to see that because we actually chopped out sellers and buyers. We remained in range. We took a look down. We rejected. We took a look at pre-market high, this level, and we rejected. And then once everyone got chopped out, then they established the move. They push again higher towards this pivot, also intraday high of day pre-market high, and then they pushed. They hold, and we started grinding towards this last week high that we got with a nice move up. And we are up there. We are holding there 1.05 on the Nasdaq. The S&P is more or less the same. They were just consolidating better than the Nasdaq. The Nasdaq was a little bit sneaky with those stop hunts, and we are grinding higher. That doesn't mean that we are super bullish. We are in the green, but we are waiting for tomorrow. If tomorrow we got a nice inflation reading month over month in terms of services and core inflation, I think Nasdaq might be heading towards a new higher high on the daily. I'm watching these levels, 15,100, and just continuing higher. We got this low, and we established last week a nice double bottom with a new higher low. And we continue grinding. This might be a consolidation before this week. And I think if we get the good readings, we might be going up on a second leg. How much? So basically, this is the first pullback, second consolidation, and another push up. 15,000 is a really, really round number, psychological. So I expect a lot of momentum there if fundamentals support this move. Who is pushing this market? Basically, consumer discretionary today, XLY is 1.32. We are still pushing. And that's because Amazon is actually 2% on the day. Look at this 1 minute chart. Quite really strong, stronger than the rest of the Nasdaq stocks. Tesla is also almost 2%, but still chopping around after pre-market, after actually gapping up after in pre-market. So we are establishing this range for tomorrow, but I think a lot of expectations, a lot of investors and big players are waiting for tomorrow. I didn't see huge orders on the tape today. That was quite interesting. I have a filter for those, and I didn't see any until noon. So 4 hours without big blocks. That means that big investors, big players are either already hedged out or they are not willing, they are staying cash or in other parts of the markets, just playing sidelines until the number really comes out tomorrow. What else is interesting? I would like to point out dollar. Dollar is also in the green. So tech stocks in the green and dollar in the green. Something is sketchy here. So be really, really careful because usually dollar and stock market are not going up at the same time. And yields, nothing interesting. They are just holding the 2-year, the 10-year. They are still super high. And one of the things I like is small caps. The Russell, it's 0.43 in the green today. They push higher and they are holding, so a little bit of risk on, but I don't see big moves. Meta is also 1.62, a little bit grinding higher, but we are still in this huge range that we are waiting for basically continue filling these huge gap on earnings last year on February. In terms of banks, Charles Schwab minus 2.42%, and CMA, Connecta Incorporated, another regional, it's quite in the red. So XLF is actually 0.30 and energy, surprisingly, is minus 4.45%. Look at this huge candle. Energy and crude oil are blowing out, are blowing off. They are breaking down quite heavily. Remember, we broke structure. We just push higher due to OPEC Plus and Saudi Arabia playing games and manipulating the prices with production cuts. But I think players, they didn't buy this kind of move and they retrace back down. So this is now looking really, really bearish. Let me just it, because I don't think I'm going to remove this investment because it doesn't make sense. I can see crude oil at 64, 65 again. If we check, because this is really, really interesting. Look at these levels. We are actually at these levels, trying to hold. This is December 2021 when all this happened. So are we going to really see a move below 60, below this level? This level would be insane. 62, 60. I mean, I'm seeing a lot of weakness on crude oil, and this market is super, super manipulated. And I don't know, but this looks really, really weak. So let me tell you, this is showing demand destruction. In terms of inflation, this is good for us, but that doesn't mean that this is a very manipulated market. But it is what it is. We are seeing a lot of weakness in crude oil. Nothing like the huge 100 that we got on crude oil summer last year. One last thing, gold is in the red, copper in the red, and silver in the red. Also demand destruction in all metals and ahead of inflation. The only thing that is up is the Nasdaq is huge. They are continuing higher. So if we are seeing demand destruction with probably higher interest rates, why is this sector, tech sector, that is super sensitive of higher interest rates, why is this sector showing this strength? Well, they are continuing with this move with AI, FOMO hype, with all this push on the tech that I think central bank liquidity is moving a lot of inflow into these stocks. And I'm not bullish per se because I don't want to get caught up here. Today was a nice move, but don't get me wrong, this double bottom, this structure up here, we are at the upper side, but that doesn't mean that tomorrow we cannot do this. We can do that tomorrow. Tomorrow we can do huge moves. And if expectations are not met, markets will move huge. If inflation is getting out of control month over month and is still showing sticky inflation in the core part, in services and in shelter, that is the one that Fed is actually focusing on, we might see a really, really rejection up here. If not, it's all good. We can continue higher, but be really careful because we are at the extreme. We are at last week high. We are at huge levels in the tech market, in the Nasdaq. The S&Ps are actually in high of year to date. So be really careful because they are pushing out of control. And that doesn't mean we cannot just move lower if this fundamental, that is inflation, comes worse than expected tomorrow. It's everything for tomorrow. And not only that, tomorrow we got inflation, and on Wednesday we have PPI, also the second reading. We are actually expecting way, way lower month over month, and also year over year. This is also a huge reading on Wednesday, 1 hour before the market opened. And not only that, again, another huge data, another huge event. At 2 p.m. on Wednesday, we have also FOMC interest rate decision, and more importantly, economic projections, the Fed dot plot. This is going to be huge. So don't FOMO in today. Today is just a day of just move higher because we are just moving higher. There's no reason. And I prefer not to predict tomorrow reading economic data. I prefer to react to them. So I will wait patiently with patience for tomorrow and I will react to that. And same on Wednesday. I will wait for the reading and just trade the price action. And if those readings came worse than expected or a surprise somehow, I will just adjust my expectations and trade in that direction. If it's lower, that will confirm my bias on the long-term economy going lower. And if not, I will adjust following always economic projections from the Fed. I'm going to trust the Fed. So until Wednesday this is going to be a huge week. Retail sales also on Thursday, and on Friday, consumer sentiment. And this week is third week options expirations and quadruple witching day. Quadruple witching day. If you don't know what is this, just Google out, because this is huge options expirations for all of the huge assets that have options trading. This week is packed with economic data, with events, and with volatility. So just don't ruin your day just positioning yourself today ahead of tomorrow or ahead of Thursday, just predicting the market. Just wait for that data and react to that. There will be plenty of opportunity to make money. Just be patient. Patience really pay off. And that's all. A last quick look to the Nasdaq and the S&Ps. They are continuing higher, just grinding higher and higher and higher. I mean, they are just going to grind until the end of the day unless something big happen. So congratulations if you were long. This was a really sneaky play. So be careful with these kind of things. Stop hunt for sellers, sellers trap. Stop hunt for buyers, buyers hunt, and then they started the move. This is a book. This is really, really huge play that they want to play from time to time, more than you would think. So that's all from my side. As always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel. To receive notifications when I upload new videos, remember that I upload new videos every single day for market forecast and market updates like this one, with technical analysis, with fundamental, and with my approach on the markets, for you to really improve and to learn every day with me. Thank you for that. And remember that discipline and risk management are key for your success. Don't forget that. Stay safe, everyone, and I'll see you tomorrow with inflation rate 1 hour before the open. See you.